Ladies and gentlemen, welcome back to the channel on this CPI day, and CPI came out at about 8:30 p.m. Eastern Standard Time this morning, and we did not get a big reaction, because CPI came out well in line with expectations from the average analyst, like to a T. Everything came out on expectation, so we did not get that 1.5 to 3.5% up or down move. But tomorrow sets us up for another potentially big day, and there's a lot of information that you need to know about. Now, in regards to Tesla stock, Tesla is down marginally on the day. We're going to look at the option flows from hedge funds and institutional investors. We're going to talk about why the technicals might support a bounce to about that 155 to 160 range. Could really set you guys up for a lot of opportunity there. And we're also going to get into Tesla Indonesian Gigafactory, guys. So if any of this sounds interesting, or you just like to make some money, hit that like button and subscribe to the channel. This is your go-to place to be. So let's get into CPI first things first, because that has already happened, and that is typically a big thing for markets. So it says consumer prices fell 0.1% in December, in line with expectations from economists. Key points: the consumer price index fell 0.1% in December, meeting expectations for the biggest drop since April of 2020. Excluding food and energy, core CPI rose 0.3%, also in line with estimates. On an annual basis, headline CPI rose 6.5%, while core increased 5.7%, again, in line with expectations. So it's very rare that you get CPI across all four of these different metrics coming in line with expectations. Typically, that does not happen, but it happened today. So that's why you really didn't see a big move up or down. It was pretty muted, the overall response in the markets. Now, you did start to rally, and the markets were up about 0.5%, and then you started to get this weird, almost like an algorithmic type sell-off, and it was probably the trading algorithms that started to sell stocks off, and you dropped down to about negative territory. Now you're up again almost 0.5%, so we'll see what happens by the end of the day. We're recording this video at almost 2 p.m. So you know, things can give or take move around a little bit, but nonetheless, as far as Tesla stock is concerned, if we take a look at the option activity here today from institutional investors and go ahead and refresh this page, that is currently sitting at 348 orders totaling $74.7 million, positive order value of 40%. So not as positive as what we're typically used to. Again, not as high of a dollar amount of options or of dollars going into Tesla options that we are typically used to seeing on a day-to-day basis. That's probably why the stock is down about 1.98%. You're not down a lot. You're obviously not up. That could be to do with option activity, because a big part of Tesla right now is the stock is down still 65 to 70%, just depending on when you're watching this video, from its all-time high. So it has been beaten down to its multi-year support levels. It's almost back down to its pre-COVID high, obviously, with the split price adjusting there. So it's been beaten down a lot. So if you wanted to sell Tesla, you probably have already sold it. So where is the real downside and the selling pressure coming from in regards to Tesla stock? Well, it's probably due to options and people trying to hedge out some existing positions. You've actually started to see some net sells to Tesla, in which we have not seen in a couple of years, and the overall buying activity has been dramatically reduced over the past really couple of months. December was that month where the stock almost dropped 40%, and you kind of seen a lot of these different things come to fruition, right? A lot of people stopped buying Tesla, started to sell Tesla. You could say it's not even Tesla's fault, that a lot of it could be the big retail investor base that Tesla has, and even the downturn in the economic environment, right? Inflation being high, all of these other factors could be contributing to Tesla's sell-off. But now I think you're going to start to see more positioning into Tesla, especially after these demand concerns really start to go away. We got a good sign that they are, and that is the day that Tesla actually bottomed, or the day before, I should say, that Tesla actually bottomed at $101.81 when they cut prices in China, and you all of a sudden started to see delivery times go up from a week to a month on their Tesla models in China because of the demand that they started to see. So we're going to really have to wait until the earnings call to get a better feel of where that demand is actually sitting right now with Tesla. And from one thing I know, being an investor in this stock for a while now and watching this stock ever since before COVID, right? You're talking 2017, 2018 is really when I started to pay attention to Tesla a little bit closer. You don't want to bet against Tesla on earnings. Tesla has very seldomly dropped a lot on earnings. Even if they do drop, it's usually not a lot, and you tend to get smoked on earnings. So I don't think this time is going to be any different in regards to Tesla. Now, why do I think there could actually be a pretty decent rally to the upside? Well, for one, the stock has dropped a lot. And like I said, 65 to 70% from its all-time high. Yes, you have bounced up about $19 from the low at 101, but look at the chart. I mean, in the grand scope of things, you haven't really bounced that much. And the real question here in investors' minds is, what is the growth rate going to be for Tesla? So when we can establish that Tesla will grow 35 to 50% in 2023, the stock is undervalued at these prices. And that's when the stock will really start to get bid up the most. But like we've seen in the broad markets over the past couple of days, the markets were rallying in anticipation of CPI that came out along expectations, and then you really didn't get a rally today, right? So that, in a way, could happen leading up until Tesla earnings, especially if we get a new announcement from this Indonesia factory, or potentially the preliminary deal to make a factory in northeastern Mexico as well. So why do I definitively think Tesla could reach 155 to 160? Well, it wouldn't be a huge rally from here. That's number one. Let's go ahead and just see what the percentage gain would be on a rally like that. That would be roughly a 24% rally. I think Tesla could do that in a single day if some of these demand concerns were actually denied, right? That this is actually not a big problem, that there was just a lag time in the amount of vehicles that were produced from Tesla that were actually delivered. Like we've seen with their delivery numbers, they actually produced like 438,000 vehicles, but delivered 405,000. Well, maybe it's because the deliveries were not actually done by the time they had to collect their data to report earnings. But a bigger reason why I think Tesla could actually rally to that 155 to that 160 range, a lot of it has to do with technical indicators. So when you're looking at the RSI, you were severely oversold and you have not really seen a big bounce in the RSI. Neutral is around that 50 level and you're at 38. So you're still under neutral. So just to get to neutral on a relative strength basis, you're going to see a pretty decent move to the upside. Now, the MACD is also crossed into bullish territory, and you're also seeing a lot of technical indicators. We've talked about them: engulfing line, outside bar, RSI, and the MACD, the moving average convergence that we have been seeing, right? All of these I just went over, but let's introduce a new one for you guys, and that's going to be the Bollinger Bands. Now, the Bollinger Bands basically measure volatility, and the wider these bands are, the more volatile. So, for an example, like right here, this is signaling less volatility than right here. When these bands, this yellow band and this brownish tan looking band, are wider, that is where there's more volatility. Less volatility, more volatility. And typically, when these bands start to converge into less volatility, you can actually see more volatility in the short term. Well, this midline right here is the 20-day moving average. If we can break above this 20-day moving average, you might start to approach the upper end range of this Bollinger Band. Typically, that's what happens, right? If you take a look at any other time in Tesla's last year, if you break above this blue line, this 20-day moving average, you typically test the higher end band of the Bollinger Bands, whether there is low volatility or high volatility. You typically always do, right? Broke out above the 20-day moving average, you rode this high end Bollinger Band like all the way up, right? And you broke it again, you hit the higher end Bollinger Band. And how institutions really use these Bollinger Bands is to show, like, when the stock is close to this upper end Bollinger Band, the upper range of volatility, they tend to sell the stock, right? But if you break out above the 20-day moving average, like I said, it can be a pretty good indicator to buy the stock. Like you can see right here, this was February of 2022, we were finding resistance at this mid Bollinger Band, right? This 20-day moving average. And then look, you broke out above it. And then you rallied to the upside. Got extreme volatility. The Bollinger Bands obviously moved, but you rode this upper end Bollinger Band to a T until you eventually hit that sell-off mark. And you can see right here, you broke the 20-day moving average. This Bollinger Band right here went up to the upper end band. And this tends to happen over and over and over again. So from my perspective right here, if you can get this percentage gain, is really going to blow your mind. If you could see a 4.5% to 5% rally from here and break out above that 20-day moving average, you could easily test that 150 to 160 level, really that 155 to 160 level at the upper end range of this Bollinger Band. So let's get into what we have tomorrow as far as things that could move the markets, and then we'll just read this Tesla Indonesian Gigafactory article because it's very small. It's like 3 paragraphs total, and it'll probably take like 60 seconds to do. So we'll give you guys all the information on that. But first, what's going to move the markets tomorrow is going to be the Michigan Consumer Sentiment Survey. That is going to be the big thing that does come out tomorrow. And these surveys are important because it kind of gauges the consumer sentiment, right? How they feel about inflation, how they feel about their jobs. Are they expecting a pay raise? Are they expecting to buy a new house, a new car? You're going to get a lot of different information about the consumer that is important because expectations lead to reality, right? If you expect to get a pay raise in 3 months and you don't get that, you might make some different decisions, just for an example. Or if you expect inflation to be 10% in your vehicle that you want to purchase, right? Let's say a Tesla, for just an example, because we're talking Teslas. If you expect a Tesla to be 10% more expensive next year and you have the option to get it this year, a lot of people are going to get it this year, right? And same thing vice versa. When you expect discounts, people might opt to wait. Not necessarily as much though. So that's going to be the big thing coming out tomorrow, as well as that you are going to have bank earnings. You're going to have the big dogs, Bank of America. You're going to have JP Morgan. Those are the 2 big dogs. Those are going to be the 2 biggest banks that the markets are going to care about because they have the most assets under management. They make the most amount of money. They're the biggest banks in America. You also have United Health Corporation or United Health Group, Delta Airlines, Citi, Wells Fargo, BlackRock, BNY Mellon, and First Republic Bank. All of these will be important, right, for their own obvious reasons. But the overall banking sector, we want to know, are delinquencies going up? Are saving account rates going down? How much money do people have in their checking accounts, right? We want to know all that information. It's important to the state of the economy, which is going to be the biggest thing that markets really care about throughout all of 2023. So there's that. That's really it for tomorrow. You don't have anything else. You have a 10 and a 30-year bond auction that can move the markets, but it tends to be a 1 or 2 minute event, not necessarily like a whole day event, right? So Tesla boosted by Indonesian Gigafactory. Tesla is on a comeback tour. It lost plenty of ground last year, but has been frantically working to make it up ever since. It even added some more steam today as words emerged about its next planned Gigafactory location. It's a bid to secure primacy in the electric vehicle market, and an unexpected one at that. Tesla's new target for a manufacturing operation is none other than Indonesia, reports notes. While some may wonder why, especially given that Tesla already has its operations in China, there are some clear advantages to locating a factory in Indonesia. One of the biggest such advantages is readier access to many common minerals required for building Teslas. Indonesia has about a quarter of the world's known nickel reserves, and that's just for starters. In addition, the Indonesian Gigafactory would reportedly have sufficient capacity to produce as many as 1 million vehicles per year. Considering that Tesla delivered a total of 1.3 million vehicles in all of 2022, that's a huge step. Furthermore, it's poised to expand the Austin Gigafactory to the tune of 776 million. It's also set to expand the Berlin Gigafactory to produce up to 1 million cars as well. However, some point out that the Tesla market in Indonesia itself might be a hard sell. The average Indonesian car costs under 20,000, which is well below most Tesla models, so it might actually give Tesla a chance to make a cheaper model to sell to the world. A big reason being that labor costs are a lot lower in Indonesia. The mineral costs are going to be a lot cheaper. You're not going to have to, send big boats across the ocean to get these minerals delivered, right? It's more all in the same location, for a lack of a better word there. So that is really it for this video, guys. We don't have anything conclusive on Indonesia or northeastern Mexico. It is conclusive. They will be expanding on their United States factory, their Austin factory, but little is yet known about concrete plans for global expansion, global domination of the Tesla vehicles. So that is it for this video, guys. Hit that like button and subscribe to the channel. Source your comments, questions, or concerns down below in the comments section. Thank you for watching. Most importantly, enjoy the rest of your day, and I will see you in the next one.